this is great. We are up and running again. It's full disclosure Thursday, and we're super excited and super lucky to have Paul Gaetani from Gaetani Real Estate with us today. A you know uh, old school kind of. You've been around for a long time. Your family's been in the property management business in San Francisco for many moons. So we're super excited to learn about property management and kind of the solutions that you have and you bring to people who, because it's not an easy job, and it takes a lot of talent and experience to do it well. So welcome, Paul, and please go ahead and give us a little introduction.
Yeah, thanks a lot, Eddie. So yeah, Gaetani Real Estate has been around since 1946. It was started by my grandfather, and he started in San Francisco building apartment buildings in the 40s and 50s after World War
Wow.
II. As you know, if you're familiar with San Francisco, there was a lot of development and a lot of change in San Francisco during that time. So it was a very interesting time to be in the city as it was changing, and there was a lot of construction happening, and he certainly took part of that. And he saw an opportunity, to after you built these buildings, or in these smaller buildings, these 3-unit buildings, 4-unit buildings, that the people he would sell them to, they needed management. They didn't want to manage it themselves, and so the management business kind of started there. And it's grown ever since. Our dad ran it. Me and my brother, who run the business now, our dad took over the business in the 70s, ran it up until about 5 or 10 years ago, is when he really took a step back. And now we're one of the largest management companies in San Francisco. We have about 400 properties under management. It equates to about 3,800 units is kind of how we
Wow.
measure
Incredible.
ourselves. It's all third-party contract management. So a lot of local mom and pop owners that we manage for. Half of that portfolio are 1 to 4 unit buildings. So it's a lot of smaller buildings that we've built the management of our company on in the city, and that's a lot of what the city's made up of these smaller buildings. The city is made up of individual neighborhoods, and a lot of these little neighborhoods have these smaller type buildings. So that's what we've specialized in.
Cool. And that's kind of a situation that comes up for us a lot, where we have clients who, they live in 1 unit and they might have 1 or 2 rentals in the building, or they have a condo or a single family that they are moving out of to go either buy another house and they want to hold on to it, or they're moving out of the area, and they don't necessarily want to deal with the property management. The most common scenario we get from people is, I don't want anybody calling me for a broken toilet.
Mm-hmm.
So you will handle those phone calls. Can you
Mm-hmm.
walk us through kind of what the picture looks like? Like, let's say we own we live, because you do have some people who maybe live in a unit and still don't want to manage the other units, right? So yeah, how would management of somebody's unit kind of look like?
Yeah.
What does it entail and cover?
Yeah. So we like to bill ourselves as a full service property management company, meaning that we take on the day-to-day tasks of managing the building like we own it ourselves, in that we are the first and only person that the tenant has contact with. So if there's an issue, like you said, a toilet needs to be changed, or there's a leak coming through my ceiling, they call our office, and they speak to someone who's been assigned to that account, to that particular property, and that person manages the vendor, they manage the tenant, they manage access to the unit, and they manage communication with the owner, and advise you as to how you should make the repair, what the repair is going to cost, who's going to do the repair, and when it's going to happen. So It's a lot of interface between our property manager and the client, and the property manager and the tenant. We're very much like a go-between um, to provide that buffer in between the owner and the tenant. The political climate in San Francisco is such that it can sometimes be a contentious relationship. And having a third-party manager who is aware of all the laws and is aware of how to handle tenants on a day-to-day basis, because that's all they do, is very valuable. Oftentimes, the smaller owners, the owners that have a set of flats, a condo, they're doing other stuff. They're
Yeah.
not involved in the day-to-day management of people in their homes, and
Yeah.
it really is a specialized profession, to manage that communication and to manage those expectations. So
And to
that's
do
what
it correctly, to
yeah.
handle it, because you need to do it in a prompt manner, and professionally, and so forth.
Yeah.
I think, do you have a way of turning off? Do you have notifications on your computer? Uh,
Oh, is it popping through
yeah,
here?
because
Oh, yeah.
we keep getting the Bing noises on our
I'm
end.
I'm sorry you're hearing that. Oh my gosh.
All
That's
those
okay.
people with broken toilets pinging in.
Yeah. Yes, it's just broken toilet popping in there.
I'm sorry. Yeah, you can hear my email sounds and notifications. Here we go.
Is that on purpose, Paul, so we can see how busy you are?
Okay, hold on. Yeah, look at that. Oh man, I'm beeping all over the place. All right, let's see. All right. Hopefully that, hold on, there's one other place I need to delete here. Let's see. Preferences. I'm really sorry, guys. Let's see.
No, that's totally fine. So, while I'll give you a question to think about while you do that, and that's,
Yep.
it's 2 o'clock in the morning, and I own a property, and the toilet's broken. Um, how does it does Is there a message system that somebody can leave a message or send an email in regards to that, and then somebody who is there responsible for it handles that the following day?
Yeah, we have an online maintenance request system through our website that gets sent out to the portfolio manager directly, who's handling that property. So they'll get an email notification immediately, 24 hours a day of an issue. If it is an emergency situation, such as a fire, a flood, or blood, sometimes we say fire, flood, or blood. If it's any one of those three issues, they'll call our on-call service. They'll call our main line, and they'll be routed to an answering service where they'll screen the call to make sure that it's a legitimate emergency. And they will route that emergency information to someone that's on call in our office. Usually it's one of our portfolio managers that has a list of all of the contacts of the clients, of our vendors, tenant list, those types of things. So they'll be able to handle the problem 24 hours a day. That is a service we provide.
Wow. That's amazing. And then also, I think, somebody, so you don't have to be communicating all the time with the owner. The owner can say to you, hey, any issue up to $1,000, you can just go ahead and take care of, and I trust you to do it correctly. If it's over $1,000, please come and ask me, and we can authorize if this should be done, right?
That's correct. Yeah. So it is $1,000 is what we set our minimum at. We like to give ourselves authority to replace a hot water heater if we have to on an emergency basis without having to check
Seek
in.
approval.
We
Yeah.
need to be able to effect routine repairs and necessary repairs. And that speaks to trust. Trust in our decisions and trust in our recommendations is paramount to a successful relationship with a property manager. You need to trust that they are looking after your best interests, that they are making the right decisions for you and your property and your tenants. And having that $1,000, we have some clients push back on that, and that's sometimes like a little bit of a red flag for us. Like, hey, if you can't trust us to spend $1,000, I don't know if you're
Wisely.
able to trust
Yeah.
us to manage your property, and so there's always some red flags for us when that kind of pops up, because it's the foundation of our relationship.
Yeah.
You know.
Yeah. And nowadays, with the cost of just showing up and stuff like that, just to fix a water, like if you can get, I'll hire you if you can repair my water heater for $1,000. So you got my business right there.
Yeah.
So but
This is going up. Yeah.
and then what about there's also just, laws and regulations to follow with San Francisco, and, properly managing a process, and, paperwork, and all of that. And then um, that, do you guys, you kind of get up to speed and educated on all of that stuff on a consistent basis?
Yeah, that's a great point. San Francisco is a rent-controlled jurisdiction. If you have anything more than one unit in your house, if you have a single-family home with an in-law, that in-law unit and that upstairs house unit is covered under rent control. And the rent control laws are constantly changing. There are, certainly with COVID, there have been a lot of changes that have happened, and rules that you need to follow to protect yourself as landlords, and that we absolutely stay on top of all of that. That's our job. We're professionals in that manner, to be able to attend all of the industry events and meetings that provide us those sorts of legislative updates. Absolutely, we do. Most recently, there was, it's called Assembly Bill 3088. And I don't know if you're familiar with it or if you've discussed this with any of your clients.
We haven't. We've heard about it, but please enlighten
I'll
the
give you
floor.
the high level. Basically, with COVID, a lot of tenants have not been able to pay rent, and so far since March, you have not been able to evict these tenants. And so, what Assembly Bill 3088 does is transfers that unpaid rent debt from these tenants to what they are classifying it as consumer debt. So you're not able to evict these tenants to recapture payment or to take possession of the unit. You'll never be able to evict these tenants based on this lost rent. You can potentially go after them in civil court for this rent, but you can't take possession back. And there's certain notification requirements you had to send out by the end of September to
Qualify to be able to
qualify.
file a small claims court kind of.
Exactly. So it was a big fire drill. We got notification of this around, the middle of September, and we had to send out, several hundred notifications to our tenants that were carrying debts because of COVID. And so I use that as an example of something that, if you're a casual landlord, and your tenant hasn't been paying rent, and you could be lost, and you could lose a lot of your rights and waive some of your rights if you're not staying on top of this stuff. And that's what we do.
And even just because I was on a call with one of the attorneys who was handling all of this stuff, like a big general one, and it was so complicated.
Yeah.
It blew my mind. Like if I was an individual landlord in that scenario, I'd be like, this is just mind-boggling. And and a lot of stuff you just kind of had to do just to be compliant. It's not that you were going to do anything or anything. It's just to properly make sure that you're in the correct, right place, and you're doing the right thing as a landlord. And at the end of the day, that's all anybody wants to do, right? Is the right thing. So
Absolutely.
yeah. Cool. So what else did you guys then will do stuff like, will you pay the property taxes and pay my PG&E bill and pay my garbage bill and my water bill and all of that stuff?
Yep, absolutely. So, we collect all the bills of the property and pay them on your behalf out of the proceeds from the rent. And so you wouldn't be tasked with really writing any checks whatsoever for the property. At the end of the month, we provide all of our clients an income and expense statement, which shows the money we collected, and here's all the money we paid out. And then we provide them with copies of the receipts all electronic, all, we send this out digitally to all of our clients every month. And then,
And I can give that to my accountant, whoever prepares my taxes,
yep,
and
we
says,
work closely with many CPAs in San Francisco. They absolutely love our accounting because it's detailed and it's accurate and it's electronic. It could come in the form of Excel. A lot of these smaller landlords are writing stuff in their checkbooks, right? And they're not keeping detailed records. And so CPAs love working with us because everything gets to them immediately at the end of the year. It's broken out by month, and we classify things, with capital improvements, utilities, mortgage, principal and interest. We break that out for people. So yeah, absolutely. We provide a full accounting for all of our clients on a monthly basis.
and which is amazing. And then let's say we've got a 2-unit building, and we lived in it, and now we moved out, and we're going to rent out all the units, but it needs a bit of work. And I'm thinking, okay, we're gonna take on one project per year to do, just kind of move it forward, and every year we'll do something. Is that something that you guys kind of can help manage and oversee and stuff?
Yeah.
Uh,
Yep, that's another part of our business as well. We manage projects for you. We'll manage unit turnovers. If there's a very tired kitchen and say, hey, we think we need to remodel this kitchen, or we need to paint the unit, we could get vendors in there to give estimates and do that type of work too. As complex of projects as like a seismic retrofit. A lot of these smaller buildings are going to need seismic retrofits in the coming years, we suspect. And those are going to be some complex projects. There's interfacing with architects, engineers, getting multiple bids from contractors. That's all stuff we do on our clients' behalf.
Cool.
So,
And is that something that seems like an extra service that would be beyond the management fee,
it is,
right?
yeah. So
Yeah,
that would be beyond the basic scope of our management fee. Mm-hmm.
yeah, yeah. And then because management fees it seems like they're San Francisco in a lot of ways is quite affordable for property management in comparison to other parts of the country where rents aren't as high. They tend to seem to charge a higher percentage. So in general, is it a flat fee kind of scenario of a percentage on the rent for how management works, or is it more customizable? How does that
Yeah,
work?
good question. So it is a flat fee as a percentage of the rents that we collect.
Yeah.
For smaller buildings, you're looking generally somewhere between 5 and 6% of the gross receipts. And you're correct in that is a lot less expensive than in other markets around the country. Other markets, you're looking more like 10%.
10%. Yeah. No, like,
Which is pretty standard. There's a lot of competition in San Francisco, which has certainly driven that rate down. But you're also right in that there is a lot of high rents here as well. So it does kind of balance itself out. And if you think about the value that we add in terms of, the time that we save clients, and also the professionalism that we bring in terms of, like we just discussed, this AB 3088, complying with those types of things, 6% is really a small amount. You're getting a lot of value for 6%.
oh, I think it's a bargain, like you can be away on vacation, you can be traveling, and this is an important asset and something that's generating income for the landlord, and yet it's all seamless
Absolutely.
in the process. Because you do, after you charge for pay the bills like the water and all that stuff, then the remaining net receipts get transferred into the landlord's bank account?
That's right. Yeah, we electronically transfer the net proceeds into our clients' bank accounts. So,
And then what about, we've got a unit or a couple of units, and everybody's all younger techie kids, and they all want to pay their rent online.
Mhm.
Is that something that you guys can handle, or what way do you deal with that? Or does
Yeah,
somebody have to mail you a check?
yeah, no, we have an online payment system. We have a couple on our website that tenants are able to use. So yeah, they could pay with like an e-check, which is like an ACH transfer through their bank account into ours, or they could pay. You can pay by credit card through our website. So and they could also bring by a check by our office. They can mail in a check. They could set up auto pay from their own bank, and it will also send it into our bank account as well. So we have many. There's really no excuse not to pay rent.
So a quick question on that though, in San Francisco, we're pretty careful about not taking a rent check from somebody who's not on the lease. Are you like, do you monitor that and make sure that you're getting
Yeah,
the right person?
that's a really good point. So yes, we do. The way we track that and monitor that is to make a payment online. We use a platform called Rent Cafe. It's integrated with our accounting system, which is what's called Yardi Voyager. It's a property management system. And to set up an account in Rent Cafe, our tenants have unique, what they're called tenant codes, T codes within our system. We need to give out that T code physically to our tenants to set up that account. And so if we give that to you, we are, affirming that you are the owner of this account and you're going to be the only ones able to pay rent. So that's how we monitor that. They also affirm that the accounts that they're sending rent checks from are accounts in their name or their spouse's name only, and there's no other third-party members or people on those accounts. We've
Oh,
been
right. They even verify that there's no, like, it's not a joint account with somebody else who we don't know, and yeah,
right.
all that kind of stuff.
And that's they affirm that. We've been running this system for I want to say we've been collecting online payments like this for maybe 5 years. We were pretty slow to adopt it because of that very concern. And we process, maybe 10 to $12 million a month in rent, and over the last 5 years, and we've never had an issue. It has not been an issue for us whatsoever.
Cool.
That's
And you
fantastic.
manage tenant or unit turnover, so you'll do the whole like advertising and underwriting
Yeah,
process?
that's another large part of our business is leasing. We do quite a bit of residential leasing, so we'll obviously manage the turnover, get the place cleaned, rekeyed, ready to re-rent, and then we'll manage the marketing and showing of those units to prospective renters. And that's also all done online. Obviously, we post up the vacancies on our website, which farms out to Zillow and Trulia and apartments.com. And then we show the units and receive our applications and do all of our tenant screening and lease execution online as well.
Cool.
Wow. So that's kind of that's it in a nutshell. So it's yeah, I think there, and would you are there are a number of people, I would say, that you manage buildings for where they actually live in one of the buildings themselves, and they don't they don't want to have to be the go-to person with the tenants, because we often have people who say, is that not kind of weird, can I do that? But it's not, right? That's done by
No,
many
it's not
people.
weird at all. Yeah, no, we come across this quite often, actually. People, they want to just live, be at home and just live at home, and not live in conflict with people. They like that arm's length transaction where they can just be home and be home and not
Yeah.
have to worry about things. So that's where we come in, and I see that quite a bit.
Perfect. Well, we're also seeing, as we're going to kind of segue into our kind of market update from this discussion. I am curious to ask you about vacancies in San Francisco, and what what you're seeing as far as where we may have been last year, to where we are this year. To give you an example, on a call that we were on yesterday, there was a very interesting data point where in the condo market this year in the month of September, almost 300, and what was it, 380,
40.
340 units have reduced their price in the condo market in the month of September. Last year in the month of September, one condo reduced its price. So we went from one price reduction to a total of 340. What are you seeing in regards to just kind of where we're always at a pretty low vacancy rate, and we're probably now, would we be as high as maybe 10 or 15% on vacancy?
Oh, not from our portfolio, or speaking for our portfolio, we have about 3,800 units under management. We are right now, as of a few days ago, I think we had about 105 vacancies on our website. So what is that, like 3,
4,
like
yeah, it's pretty low.
Which
Pretty
is
low.
very low. If you look at nationally, any market in the country would be ecstatic over a 3% vacancy rate. And it's certainly, we generally as a portfolio hover around 1 to 1.5% vacancy rate, which is really what has been for the last 10 years. It's been really low. So this is high for us. This is really high for us. What we're seeing is that, though we have a lot more vacancies right now, things are still leasing. We're moving units quickly. I would say that the market has come down somewhere between 20 and 25%. Now that might be high, maybe 15 to 20% off of this time last year. Clients need to be competitive in their product in terms of price and in terms of quality. Now is not the time to cheap out on how your units look. And you might be advising your clients on the sales side as well.
Totally. It's the same advice. Yeah, you got to stand out. You cannot be, run of the mill. Like this is the time where you have to be the nicer piece of product. You have to be painted and
yeah, absolutely. And like I'm sure, like it mirrors the sales market. In the rental market, tenants are savvy. They cruise Craigslist and Zillow every day, and they could just click around, and they could, they're very discerning in terms of price and amenities and look and feel of a unit. So, we are advising our clients to do professional photography. That's really important. It could make or break a unit. It makes it look so much better when there's good photos. And it's got to be clean and fresh and updated. Otherwise, it will sit on the market right now. There's so much competition. I think a year ago, pictures could be dark, units could be bleh, and things would still rent for crazy money. We're not in that market right now. And so it's been a hard pill for a lot of our clients to swallow when they hear advice like, hey, you got to spend $5,000 on a unit. Whereas last year, you barely touch up paint and you can get the unit rented for more money. And now you're going to spend a significant amount of money on your unit, and you might get less, but your unit's not going to sit on the market right now. That's
well, and you're eventually going to have to do it. I always go on like the simple analogy of, if you have a 30 unit building and you remodel one kitchen every year, that means each kitchen's only getting remodeled every 30 years, right? This is all stuff that has to be done at certain points.
Absolutely. Yeah. So we're seeing there's a lot of market disruption right now. Absolutely.
Are you having a lot of clients try to, or tenants rather, try to renegotiate their rent down?
Yeah, absolutely. Certainly the tenants that we rented to about a year ago, anyone that we rented to within the last 2-3 years, certainly have approached us with rent reductions. We have a whole process in place. to execute those reductions, because obviously it affects base rent, it affects rent increases, it could affect a number of different things. So we have a whole process to negotiate and execute those rent reduction agreements.
So if an owner is like, in that situation, or if there's just a vacancy in their building, if an owner's like, we need to get $4,000 and that's my bottom line, and you know that you're not gonna be able to get that, like, how do you handle that situation in terms of managing the owner's expectations?
Yeah, I mean, that's a tough call. If an owner is unrealistic about what the value of their apartment is, we'll certainly advise them of that. And if it's a small building, that we manage for this person, and they're being unrealistic about the value of the unit, we probably wouldn't be able to help them either lease out the unit or manage the building, because it really just comes down, time is everything for us. We're a service business, and we can't waste our time on trying to chase something that we're never going to get right now. So we have to work with people that are realistic and that are willing to take our advice and trust that we know what we're doing.
Yeah, awesome. And if we want to find you, how do we find you, Paul? Everybody ask me how, when I ever say the Gaetani name, they always ask me, how do you spell that? So
you can find us on our website. We have a website. It's GaetaniRealEstate.com, spelled GAETANI realestate.com. So go there and you could find my email address, my brother Marcus's email address, and you can see a list of all of our services, how we do leasing. You can see all of our vacancies and see the type of properties we manage. So yeah, that's probably the best place to find us.
Yeah, and it's a full portfolio from really big buildings, because you manage some larger, like HOA kind of condo building scenarios, and
we don't do HOAs. We don't do any HOAs or condo associations or anything like that. We just do apartments, individual condos,
the big apartment buildings. Yeah,
big apartment buildings, single family homes. So yeah, I think we manage about 200 1 to 4 unit buildings, about 150 5 to 15 unit buildings, and about 60 or so, 16 unit and above buildings, so larger apartment buildings in the city.
Wow.
So.
Wow. And you actually gave us 45 minutes of your time. You're awesome.
Yeah, sorry about the alerts going off. I apparently have some emails I need to respond to.
No. Well, we're going to dive into some of the sales end of this stuff, and you're more than welcome to stay with us as we kind of talk through that stuff. But if you need to go, we totally understand. So
I do, yeah. Thank you for having me. It was a pleasure. Anytime. Happy to give you guys a market update or what's going on in the property management world. Feel free.
I love it. Thank you, Paul. Appreciate it.
Guys.
All right.
Yeah.
Have a good day. Cheers. Bye. So, Sean, how are we when you said you're in a spot that has a really good signal, it's true, because I judge the quality of your signal based on the fuzziness of the picture. So, and now
you're very clear today.
You're very clear today.
I'm telling you guys, this is a new camera I got. It's fantastic.
Oh, it really is. It's awesome.
Wow, excellent. I like it.
I got like 4 bars, which is great. So, yeah.
Wow.
I don't think I ever get full bars.
Yeah.
That's amazing.
I got 1 right now in my house. Well, that was really cool. I will tell you, when I have my rental property, I will never do it myself.
No.
100% hire Paul.
Yeah.
Yeah.
There's a thought process that people have to save, the money, but when you get into the scheme of things, and the time and your ability to be able to, especially if you want to be a little bit more liberated and travel and do stuff that you're not going to be anchored down to having to respond to somebody's request, which is a viable request. If somebody has a broken toilet, it needs to be fixed. So so yeah, it's definitely well worth it. And in comparison to what you pay percentage wise in other markets, I think here in San Francisco, it's actually really, really good value.
Well, and especially just from a tenant perspective too. Like we've all been renters before, and I've never had a landlord that actually responds in a timely manner or
Yeah.
fixes stuff. and so to be able to have a third party that actually has processes in place, pretty excellent from a tenant perspective too.
Yeah. And they're super nice. Like they've great people working with them, and they're super nice.
Yeah.
It's a good setup there. So, Sean, in the world of lending, what's the latest and greatest?
Not too much from last week. Not too much has changed. There are interest-only loan programs coming back, which is great. Those are awesome for self-employed individuals, basically people who need the cash flow. They're not for everybody, but we're seeing those start to come back a little bit, which is a good sign for Jumbo. Jumbo being
For Jumbo, so like what type of, because interest only, if we get, sometimes we have people who where we see a property where we might need to do some kitchens and baths or some work like that, and it's a way of keeping the payment low when we might be spending more work on improving the property over the first couple of years. Is that how it operates? Are they interest only for like 3 years or 5 years, and
Yeah,
how big of a balance can you get up to?
this one's 10 years. So you're interest only for the first 10 years, and it's
Wow.
a 30-year fixed loan. So it's you don't ever have to worry about your rate adjusting. You have 10 years of very low payments.
No way. And then you adjust to the rate that you lock today in 10 years time,
You'll
as far
always
as
have the same rate. So I want to say it was like in the mid threes, like 3.25 to 3.5, somewhere in there. So you're fixed at that. You never have to worry about it adjusting. And the reason that I like that better than the 5-year interest only, the 7 years, is while you're interest only for that first amount of time, 5 years, 7 years, 10 years, your rate is also only fixed for that amount of time. We all know for an absolute fact that rates will be higher 5 years from now.
Yeah.
So you don't have to worry about this adjustment period down the road. So it's not for everyone. It's definitely more of like a cash flow product, but it's nice to see things like that coming back. And the equity line lenders, for loan amounts over 150,000, they dropped their margin about 0.75%. So that's good, a good sign of things to come. The lower the margin, the less risk they feel there is, right? So if they went from 3.25, to 1.74, right? So they cut it almost in half. So that's a really good sign of things to come. I will say, if you're buying a house, don't open credit cards until after your house closes. I had somebody that's supposed to sign today. So I was like texting when the beginning of this call, they're supposed to sign, and they had a credit inquiry pop up. So we have to fix things. So don't open up
that Crate and Barrel credit card. They want to buy that furniture.
That Thomasville, stay away from called Restoration Hardware. And get it the day after you close.
Oh,
yes.
God.
We have a note, a thing we give 10 things not to do when you're getting a mortgage. And Haley, on her last refi there, how many of the 10 things did you nearly break, Haley?
Not on the
5 of them?
refi with you, Sean, on a one last year, to be clear. And like 3, you don't think about it. I was looking for a new car at the time. So I forgot about that, because for a refi too, you kind of forget that it's happening. It's just kind of happening in the background.
Yeah.
But you got to tape it to the fridge.
Tape it to the fridge. And we've often had that situation where we're doing the final verification of a property before we go to sign the loan paperwork or something, and a client shows up in like a brand new car, and you're just like, oh God. And then you're like, so you didn't buy a car, did you? And they're like, oh no, it's a rental, or
Like
something like that. And you're like, oh, thank God. So So that's awesome. And how high of a loan balance on that particular product? Can you get up to 1.4 or 1.5?
Well, so loan amount will go to $1 million. So they're tiptoeing back in. It'll get you to $1 million. Okay. You have to have either 25 or 30% down. And I don't use interest only a lot, just because it wasn't all that attractive. And I like this one. This one is built well.
Okay. Good, and it's a good option for the right kind of buyer who needs a certain type of flexibility. And that on a fixed rate, that's amazing, because a lot of times those are just, they're adjustable, and you're getting the great rate now, but when you actually go to pay it off when you're fully amortized with principal and interest, the rate will pop up.
Totally.
So cool.
And the other thing I'll touch on is just for when we're making offers, I have a new tool where so we're always bidding over asking, right? So we're over list. I won't say ask. We have no idea what the asking price is. But if we're going in over list, we kind of go, okay, there's this many packets out. Like we're trying to gauge where we should offer based on the competitiveness of the property and the comparable sales. We have a new tool that'll give buyers data points to show if you bid this much over ask based on market appreciation and all these other data points, this is when you will see your home worth that price. So it just gives them a little bit more assurance. And I just started using that this week, and I like it. I think it's really helpful to buyers that are like, oh, I don't want to overpay. And it just overcomes that misconception of overpaying. What does that mean?
Yeah, yeah. Especially if you have somebody who's going to be in a property for 5 to 7 years, you want to look at that. You want to look at that data point,
right?
Because that's amazing. So I think that some of those stats yesterday, Haley, fascinated me on kind of some of the things that we're seeing, and also the whole scenario on absorption rates for particular areas and stuff. As far as, there's just certain product that's getting absorbed quicker than other product. And if you are a product that is getting absorbed quickly, like single family homes, you still have to be a really kind of dialed out single family. You can't skip on looking amazing. It has
you still have to price it right. I mean, I think the stat yesterday was there are 86 single family home price reductions in September. So it's not as if every single family is just price low, getting a number of offers and going away. Like there are still product or places that are overpriced.
And
but
I
that
think
condo number was staggering.
Yeah. And but I also think it gives a good data point where we don't like it when we get some people who will come to the process with a spreadsheet that they've built, and they're like, hey, we're looking at homes in this area, and from data that we've seen, things are going over this amount. And whenever a property pops up, they just key in the number and the spreadsheet spits out another number. And that's assuming that everybody is on a identical pricing strategy from the very start, which is never the case.
And like, I think we touched on this last week a little bit, but with the shift that we're seeing in the condo market and the amount of inventory that's on, I think buyers can tend to, and especially first-time home buyers, that can embolden them and feel like, oh my gosh, like I can just lowball the crap out of everything, and I'm going to be able to get my 2-bed, 2-bath with parking and a unit laundry in a great location for $800,000. Like, just because we want these things doesn't make them true, and we have to continue to watch the market and what it's telling us. Looking at the rental market is not. It's not going to follow identically what's happening in the condo market. And so I've heard a lot of folks kind of talking about that. And, there's a price. What do you say, Eddie? There's a price that you value the
you're
property
willing to pay,
and
there's the price that it sells for. And sometimes they are one and the same, and sometimes they're not.
Yeah. And I think that there's been this surge of kind of energy towards getting these deals on places. And the reality is sellers are not yet, for a lot of these places, coming down on their expectations either. And they don't have to take whatever offer they get. Every seller is different. So to go in with an attitude of like, it's all kind of the same, like kind of what you're saying, like everybody employs the same strategy, it's not going to be efficient for you, because you're going to be surprised.
You're going to be surprised. And that's where every single property has to go through the process where we do the breakdowns and we figure it out. Because it's funny where it's kind of like a square box, and we're trying to figure out where they've put themselves in the box. And assuming that everybody's starting at the bottom of the box or in a particular corner of the box can be a damaging assumption to make.
Yeah.
Yeah,
I mean, we saw just this week a seller go from wanting to take an offer to not wanting to take it to wanting to take it again, like flip-flopped in a matter of 24 hours a few times, an offer that we had put forward. And so there's uncertainty.
We also had a seller who just basically decided not to sell. And
while they were in contract. Yeah.
While they were in contract. And basically created a tumultuous situation for the buyer, where the buyer, rather than stick around and stick with it, was just like, oh, we're just going to go away. So
yeah, and that's just also a function of, like, you have to trust your agent and what they're doing, and also floating a property out there at a certain price that you're not sure if you want to sell, you might get an offer.
Yeah.
And then those people really want to buy that house.
Yeah.
So you got to be sure. I mean, but you got to also trust your agent and what they're doing, and make sure that as a seller, you're not doing things that are sending buyers red flags, even if that's not the intention.
Yeah, totally. So do you, Haley, have the numbers? Because I love those weekly absorption kind of numbers of how many single families went live for San Francisco in the last week, and how many actually closed escrow.
99 single families came on the market.
Ooh, that's the biggest week we've had in probably more than 2 months.
Yeah,
that's a big week.
75 went either contingent or pending, and 53 closed. Out of the ones that came active, 1, 2, 3, 4, 5, 6, 7, 8, 9-ish of them are below $1 million, below 900,000 for the list price. And in terms of condos and TICs, 156 became active, 104 went contingent or pending.
Wow, that's the biggest week in that regard too.
Yeah.
So we're definitely seeing a big movement and uptick in the amount of buyers coming into, like, there's a balance kind of that's come into it now, where there is that bigger buyer pool kind of matching up against.
And thinking about, okay, there were 340 price reductions in condos in September. I wonder how many of those went into contract, and that's what we're starting to see. So, and 45 condos and TICs closed. I find the multi-unit area pretty interesting right now. 2 to 4 units in mixed use buildings. There are 18 new listings. 16 went contingent or pending, and 4 closed. So we got a lot of multi-unit on here.
Yeah, we just for another client, I did a half-mile radius around their multi-unit, and on 2 to 4 units, and there were 71 active right around it. In a half-a-mile radius. Yeah,
it's a lot.
It's a lot. It's a lot.
So now may be the time to get into the multi-unit ownership game. There's a lot of value there. So, I've been having these conversations with new buyers who are coming into process, and they are potentially, looking for like the easy kind of 2-bed condo or single family starter thing. And it's like, well, actually, if you're willing to be kind of creative and put a little time and sweat equity in, you can really get something that's going to show a significant bump in value in a short amount of time if you go the multi-unit route. So with condo conversion or whatnot.
It's our favorite route. It's the savvy route.
Yeah.
So, well, that is fantastic. It's I'm looking at the time here, and I'm like, wow, we're already bumping up against our
I can't
finish
believe it's
here.
been a week since we did. I mean, truly, this is the fastest week of all time. I mean,
Yeah.
our somebody got sick, went to the hospital, and got already out in this entire week. Like, can you even believe that?
Yeah, but
Somebody I won't name.
I don't think they're not sick anymore. I'm just
Oh yeah,
yeah,
it's just
yeah,
like
so,
so much has happened.
yeah.
So much has happened.
Well, that's our new thing, right? One week is really in real estate. It's like dog years, right? A week is
Yep.
really a month. So we
It's
just
wild.
there's a month of things have happened between this Thursday and last Thursday.
Yeah.
Like, look at Sean's technology on his camera. Yeah, it's just getting updated all the time.
Yeah.
Well, Sean, where do we find you when we're looking for you? Because sometimes we forget. Where is it?
Just about anywhere. Sean Herrero, Sean.Herrero@rate.com is my email. Adventure Lender on Instagram, and then just Google my name, and I'm all over the internet, in the good places.
In the
in the good places.
Oh my God.
Haley, are we in the good places? Where
I
are
hope
we?
so. I hope we are. You're reminding me. I'll say where we are in a second, but my stepdad is a doctor, and they do grand rounds now virtually on Zoom.
Uh-huh.
And he works at a very large hospital in Boston, and on their grand rounds, which is a very prestigious thing that they do, where people are presenting like whatever, I don't know what they do. And
What do
somebody
you mean? Is that like where the thing where the senior doctors are with the residents and they're walking around and discussing
no,
cases?
well, it's more, they're not looking at patients. I think it's more like they're sharing stuff within the doctor community. Like,
Oh, okay.
I think, whatever. Somebody hacked into it for 15 minutes, and it was on quite an unsavory site that they were putting on the Zoom. Oh my God. So Zoom is not always like foolproof, as we're learning.
Wow.
But anyway,
Wow.
This is a clean broadcast, and we are found at Elevation SF on Instagram, elevationrealestate.com. You can find these recordings on Facebook and on our blog on our website, and just shoot us an email or give us a call.
Awesome. All right, Sean, another
Thank
great
you.
week. Thank you.
Thanks, you guys.
Hopefully today we will have a good story that we can talk about next week.
That's right.
So, yeah. All right.
Here's to
Fingers
hoping.
crossed. All
All
right.
Talk
Bye,
soon.
guys.
Excellent. Have a good one. Cheers, guys.
Cheers.
Bye. Bye.